Hi everybody, it's Holly Signorelli, CPA and wealth strategist, and we're getting close to the end of the year, so a lot of people are calling me about the car situation and getting the best write-offs. So what I'm going to talk about today is SUVs versus a normal passenger car. A lot of people still think that they can write off their whole car if it's over 6,000 pounds, but that's not true anymore. The IRS got rid of that a couple of years ago because of the Hummer situation. Remember that? Everybody was writing off the full amount of Hummer. So instead, nowadays, what you can do if you actually qualify for a 6,000 pound vehicle, truck or SUV, and I will send a list below of some of the SUVs that qualify, just so you can make sure if you're buying them. Then let's just start with an easy example that you buy an SUV that's 100,000, so it's just like an easy number to work with. Then the first thing that you can do is take off a full 25,000 of that. And that's what we used to be able to take the full amount, but now it's just 25,000. So that would leave you now with 75,000. But you can also, the first year, if it's a new car, and the first year only, you can get bonus depreciation. So what that means is of that 75,000, you can take half of it and slash it off. So that's 37,500. So now you have 25,000 that you took off, and then the bonus depreciation in this scenario is 37,500. And then what's left, you can actually depreciate over 5 years. So in this example, you would be able to take off in year one of a new vehicle $70,000. That's a great deduction the first year. And again, the rest would be over the next 4 years after that. But if you're just in a normal passenger car, like most of us are, then you don't have as much of a deduction, but there's still a good one, so don't worry. The first year, the IRS only allows you to depreciate your car to $3,160, and that is because they don't really care if you have a luxury automobile. And I'm not even talking about a Ferrari, I'm talking about just a high-end Mercedes or BMW. They're going to limit how much that you can take off each year. But the first year you can also, on a new car, take $8,000 off. So that would be $11,160 the first year. So that's also a really good deal. But what's most important that you know is that this would be if your car was 100% business, okay? And that means you need to have two cars, because obviously we use cars for personal reasons. So I recommend Miles IQ. It's a great app. It's the one that I use. It's really easy. You swipe left or right, whether it's business or personal. And all of my clients that use this app or another app, because there's plenty of them and you can use whichever one that you want, at the end of the year when I'm doing their taxes, they spit out a report that's super easy that shows charity, medical, if you're having medical miles, business miles, and personal. And what's really important about this is you can only take the percentage of all of these deductions that I've talked about based on how much of your miles are business. So another easy example is that you put 10,000 miles on your car, but 8,000 of them were business, okay? So that would be 80% of your miles are business. So of all the numbers that I was just talking about, you would only get to take 80% of that. And if it is a car that you have 100%, you could take 100% of those numbers, but that is why you need to have an app. Again, if it's Miles IQ or something else, it makes a huge difference on these tax returns. The people that use those kind of apps, they get a much bigger deduction. So I highly recommend it, and I'll put a link below for $20 off if you want to do the Miles IQ. And you also can use it for free for the first month. It depends on how many miles you put in there to see if you even like it before you even pay for it. So I hope that helped you, and if it did, then please go to my website, hollysignorelli.com. I do have a freebie on there, what your CPA is not telling you, and it covers a lot more about about the auto deductions, the home office, because that's something people talk to me about all the time, and of course, really powerful retirement plans that can save you hundreds of thousands or even tens of thousands of dollars that you probably don't know about and your CPA is probably not telling you. So I'll see you in the next video.